Hi, it's Ron Cole, your real estate resource here with Bloomtree Realty, coming to you from beautiful Peoria, Arizona. So today I just want to give you a quick market update. I want to show you what happened in the real estate market on a national level, and then we'll talk more about what's happening and what did happen in January in the Phoenix area. Let me flip my camera around here to my other screen, and I'll take you through some numbers. So there we go, got the camera turned around here. Hopefully you can see this good enough. So what I want to do here is just take kind of a broad look at the real estate market, both on a national and local level from 2017, and then we'll also touch on what happened in January of 2018. On a national level, these numbers are provided by the National Association of Realtors. Home sales actually increased on a national level by 4.3%. in the fourth quarter of 2017 over that same quarter in 2016. We also saw home prices appreciate by 5.3% in that same comparative period. And the appreciation in home prices was really universal. They were actually up in 92% of the markets that are tracked by the National Association of Realtors. Inventories on a national level are down to a 3.5 month supply. That's really pretty low when you consider that a 5 to 6 month supply is really considered a balanced or normal market. It's not a buyer's market, not a seller's market, it's just a good average market. So we do have a ways to go to get inventory back on the market. Now, as far as how the numbers shake out for the Phoenix metro area, these numbers are from the MLS put together by the Cromford Company. They are considered the leading real estate statistician in the Phoenix area. Home sales increased in the Phoenix area by 6% in 2017. And the great news about that is that's good, solid growth. Only about 4% of those sales were what are considered distressed sales. Foreclosures, short sales, or HUD homes. We actually had a higher number of sales in 2011, but over 60% of those sales just 6 years ago were distressed sales. So we're in a much better situation than we were going back last 5 or 6 years. We also saw solid appreciation in most of the price ranges. With homes up to $200,000, we saw 5 to 8% appreciation. Homes $200,000 to $400,000 saw 2 to 4% appreciation. And homes in the $400,000 to $1.5 million range saw about a 1 to 2% appreciation. The only category that did not show appreciation last year were homes over $1.5 million. However, there were more homes sold in that category last year, so that's good news. And inventory in Phoenix at the end of the year was even lower than it was on a national basis. We were down to 2.47 months supply. And again, with 5 to 6 months supply being a balanced market, we really are short of listings out there today. So what's being done to address that issue? Well, single family home permits were up by 12% last year. These are permits that were issued in November of 2017. So these homes will be coming on the market in 2018 and into 2019. People sometimes ask me if we're overbuilding again or if we're creating another bubble. So just to give you some perspective on that, in November 2017, there were 18,957 permits issued. But going back to 2004 and 2005, in the run-up to the bubble and the crash, we were averaging about 50,000 single home permits per year. So we're not even close to the number of building permits that were being issued at that time. Last year, home sales were up 17% over what they were in 2016. And again, that's indicative of new home builders finally getting geared up after the downturn and starting to get some inventory out there. One other thing I wanted to talk about real quickly here is that rising home prices don't necessarily constitute a bubble. In fact, our price per square foot in the overall Phoenix area would have to rise 20 to 30% more than they already have to reach the peak that they were in 2006. So we're a long ways away from that. There were just many factors that led to the 2006 bubble and the subsequent crash, including poor lending practices, an oversupply, as we just talked about, by the number of permits that were being issued back then, and really a lot of speculation in the market. Most of the growth we're seeing today are just people who want to buy a house and live in it. There's still some speculation, but it's not nearly at the level it was running up to the bubble, which is really good news. So taking a quick look now at what happened in January of 2018, things just pretty much carried over from December of 2017. Median home price now is $245,000. That's up to almost 9% over what it was in January of 2017. Again, a lot of that being driven and dictated by homes up to the $250,000 price range, appreciating quite quickly. Number of listings in January is down almost 11% over what they were in 2017. And inventory actually slipped in January to a 2.45 month supply. So again, we're struggling a little bit to get inventory on the market on that in that 250,000 below price range. So what are some of the takeaways from the numbers that we looked at? To begin with, 2017 was one of the best, or the best healthy market we've had in all of the 2000s. We saw growth, it was controlled growth, and it was very low number of sales that are distressed, which is good news for everybody. Analysts are projecting appreciation to continue in the 2 to 4% range. And the additional building permits should help ease the inventory crunch, especially in that under $250,000 price range we've been talking about. Another takeaway, this is just a great time to have your home on the market. With the low inventories out there, as a seller, you're really in an optimum position right now. And there's really still some great news out there for buyers as well. There are some loan programs that can help people with down payment assistance. And today, with the mortgage rates that we have, even though people talk about the rates going up, you have to realize that we really are at historic lows. I just wanted to share with you some information here from Freddie Mac that shows what the average interest rate has been over the past 30 years, and I think you'll be surprised. If you take a close look at this chart, you'll see that the interest rates over the past 30 years, you can see how they've dropped going back to 1987. 1987, we were at over 10%. We ended last year at 3.92% for a 30-year fixed mortgage. But if you look at this indicator down here, the 30-year interest rate average has been 6.78%. So even though we're hovering around 4%, it really is historically low rates. But here's the bottom line. Whether you're a buyer or a seller, now's the time to act. If you're selling a home, this is probably your best opportunity in many years to put your home on the market and get absolute top dollar for it because of the lack of inventory. But if you're a buyer, it's time to get off the sideline and get in the game. Home prices probably will continue to tick up, as will interest rates. And with the interest rates being as they are, as I showed you earlier, homeownership is really affordable, especially compared to the cost of rents in the Phoenix area. So what I'd like you to do, whether you're a buyer or a seller, is give me a call, 602-743-0806, or text me, and let's get together and talk about your situation. You can also message me. I look forward to talking to you soon. Ron Cole, your real estate resource, 602-743-0806. Thanks for watching. Have a great day.